Financial. Thank you so much for watching our podcast, Real Estate Insider, Where America Goes for Funding. Give Angelo, Christian a call or text us 832-431-6331. Today we're talking about, we're specializing, focusing in on first-time buyers. What are the mortgage loan programs for first-time buyers? So we're going to break down all the different loan options that are available if you're a first-time buyer trying to buy your house, because it's very confusing between first-time buyer, down payment assistance, grants, bond programs, second liens, FHA, VA, USDA, conventional. So there's all these different products, and if you are not in the mortgage industry or real estate, you can get very confused. So I wanted to make a segment just on the first-time buyer, so that way you have a very clear understanding whether you're a consumer, a buyer, you're a realtor, you're a broker, a builder, developer, whatever your situation is, that you could break it down to see what's going to be the best program for you. Because if you're a veteran, you may not want to use FHA because the VA loan has more benefits if you're a veteran than doing the FHA loan program. Hey, Kevin, what's up, buddy? Thank you so much for watching, man. So it's important to understand, the type of loan that you want to do, because, you can pay less interest, pay less closing costs, pay less fees. And that's what it's all about, is going to be what's going to be best for you. It's not about what's best for the company, me. Of course, we need to make money and we're a for-profit business, but ultimately it's about what's best for you. And that's what this show is about. The whole thing of what we do here is to educate you, empower you, to get you the information, the knowledge, so that way you can make the most informed decision. So with that said, let's kind of get into it real quick. So if you're a first-time buyer, there's a lot of different loan programs that you can do. You can do FHA, you can do VA, you can do USDA, you can do conventional. Okay, so those are going to be the main programs. Now, first-time buyer is not, there's not an actual loan called first-time buyer loan. All right, so it's not a product. It means if you're somebody, a first-time buyer is somebody that has not owned a house in the last 3 years. So if you have not owned a home in the last 3 years, you're considered a first-time buyer. So, but there is not a specific product for that. Now, inside of first-time buyer incentives, which there are plenty of them, you can do the FHA program, you can do VA, you can do conventional, you can do USDA. So we're going to focus on those 4 products today to see which one is obviously going to be the best one for you. Obviously, the first one, the VA program, which is one of my favorite loan programs for veterans. If you're a veteran, you don't need to do any of the other products, because VA, in my opinion, is the best loan to get, because there's no income restriction, there's no location restriction. It's the most lenient underwriting. There's no loan limit. There's no mortgage insurance. The benefits go on and on and on. Very low interest rates. There's also Texas veteran. There's California veteran programs. So there's a lot of opportunities, a lot of incentives if you are a veteran. And you can also apply there is something called a first-time buyer tax credit that you can add on top of the VA loan, MCC, mortgage credit certificate, that you can add on top of the loan. That gives you a $2,000 annual reduction in your property taxes. Now, if you're a disabled veteran, depending on the state, like in Texas, if you're a disabled veteran, you do not pay property taxes. So some states are different. You just got to check with your state. But the first option, of course, is going to be VA. And we go down to a 500 credit score with the VA home loan. And it's a wonderful product. Like I said, low interest rates. Interest rates are going to be extremely low, starting right now at 5.25% as of today, May 2025. Now, those are going to change, obviously, with the market. And like I said, no PMI. So I'm a big advocate of the veterans. You can buy a 1 to 4 family. So it has to be a 1 unit to 4 family. It is for your primary residence only. All of the first-time buyer programs are for primary residence only. Okay. So the VA is the first option. The second option is FHA. Now, this is for people that are non-veterans. And so for the FHA loan program, this was designed back by FDR, Franklin Delano Roosevelt, in the 30s to help consumers to be able to obtain affordable financing. And so the FHA program is a very good program, in my opinion. And that Texas tea. So, so the FHA loan, it does have different restrictions than the VA. The FHA has a loan limit. The loan limit is based on your county, and that can be anywhere from 500,000 to $1 million. And you can also, that's for a single family. You can also go up to a 4 family with FHA. Now, the more units you add, the higher loan limit. Like if you did a 4 unit in some parts of the country, you can go up to $2 million. So, 5 unit, for example, is 500,000. 2 units, 700,000. 3 unit, 800,000. 4 unit, $1 million. And it has very low down payment. You only need 3.5% down. And we have first-time buyer down payment assistance programs where you can get up to 5% contribution for your down payment and closing costs. We go down to a 500 credit score of this program. This program has no location restrictions. It has no income restrictions. Okay, but it has the loan limit restriction. A maximum debt ratio of 56%. These are all full, all of these products that we're talking about are full documentation loans. So you have to show your income for the last 2 years. No bankruptcy or foreclosure on the last 2 years. So, but it's a wonderful loan program. It does have mortgage insurance. So you will pay PMI for the life of the loan that you have it. The PMI has come down considerably. It's a lot more affordable than it was years ago. But it's a great program because it very low interest rates, flexible requirements, goes that low credit score, low down payment. You can use the down payment assistance. You can use the first time buyer tax credit, the MCC certificate on top of the FHA to help you, to give you better tax incentives to lower your property taxes by up to $2,000 per year. So another great program is the FHA. Okay. As I mentioned, there are no location restrictions, which is the next program we're going to discuss, is the USDA. So the USDA program is a wonderful product, and this is for people that are living in a rural area. And there's a USDA map, and you can see we've done several videos on the USDA. There's a USDA geographic map, and you have to follow that location map to get the financing. So you can't buy in an urban metro area with the USDA. You can only buy in a rural area based on the map. And the map will tell you when you put the address in, if it's approved or not. Okay. But the benefit is that you get 100% financing. There is no down payment. Now there are income restrictions. This one has a lot of restrictions. There are income restrictions, and the website, the USDA website, will tell you what the income restrictions are. So you have to look at the website, put how many people live in the house, what county you live in, and it will tell you what your income cannot exceed. Okay, so the income cannot go over that amount to be able to get the loan. Okay, and this is for people that do not currently own a primary residence. The USDA, one of the restrictions are you cannot currently own a house. You have to sell that house or be a first-time buyer to use the USDA program. Okay, unless you can document that your current home is unhabitable or unsuitable for your current living needs. But it is 100% financing. It does have mortgage insurance. It is available nationwide. It does have a very low PMI rate, a low interest rate, and you can get 100% financing based on your income. Now, the debt ratio maximum on this is usually 45%. It mirrors closer to conventional lending. But another great program. And then lastly is the conventional loan. So this is like a traditional conventional Fannie Mae, Freddie Mac loan. It's a great program because it has low interest rates, low PMI. There are no income restrictions. There's no location restriction. You do have to have at least a 700 or higher credit score for this one. And the maximum debt ratio is 45%, but you get lower interest rates. Okay. And you can go to a higher loan amount. So there are loan limits for this program. The loan limit for conventional anywhere is from 800 to 1.2 million, depending on where you live. You can look up the Fannie Mae, Freddie Mac loan limits. And for example, if you live in Dallas, Texas versus Los Angeles, California, the loan limits vary drastically from 800 to 1.2 million. So you have to follow what that shows on the matrix, the guidelines for the loan limits. And you can go over that amount, but then you have to put the rest of the money down or get a second mortgage to finance the difference. Which we offer all of these products. I'm just explaining to you what the differences are with the first time buyer. Now you can add the mortgage credit, the MCC on top of this. These are all 30-year fixed mortgages. They do require that you escrow your taxes and insurance, and they're all full documentation. But like I said, we specialize in all of them as a direct lender, funder, processor, underwriter for these loans. So if we can help you to add value to get you financing, please reach out to us. We're here open 7 days a week, and call, text my office, 832-431-6331. It's where America goes for funding, guys, for the last 2 decades. Angelo Christian, helping hundreds of thousands of people. Please give us a call, 832-431-6331. Thank you so much.